Welcome back to the Deep Dive. Today, we're going to be cracking open SoftBank's 2024 annual report.
Mhm.
They're really pushing this idea of themselves as architects of the information revolution,
hmm
especially through their AI investments. It's ambitious stuff. They're even talking about building a company that will last 300 years. To help us make sense of it all, we have an expert in financial reports joining us today.
Hi, thanks for having me.
It is fascinating to see how SoftBank frames their narrative.
Yeah.
This isn't just about short-term gains. It's about positioning themselves at the forefront of what they believe is a massive technological shift,
Right.
much like the rise of the internet. Okay, so 300 years is a pretty long time horizon.
Yeah.
What exactly is SoftBank's game plan here?
Well,
What's the roadmap for this so-called information revolution?
they're laser focused on AI. Their report claims it's poised to redefine all industries,
Okay.
just like the internet did in the 90s.
Right.
But they're not just passively investing.
Right.
They're building what they call an interconnected ecosystem, where their portfolio companies can work together and create synergies.
I see. They talk about this ecosystem idea a lot. Can you unpack that a bit more? How does this interconnectedness actually play out in their business model?
They break it down into three capital inputs:
Okay.
their portfolio companies, financial capital, and human capital.
Gotcha.
This means they're actively involved in building relationships and fostering collaboration between the companies they invest in.
So it's not just about throwing money at anything with AI in the name. They're trying to create a network effect where the whole is greater than the sum of its parts.
Exactly. And they're investing across the entire AI stack, from the foundational level with chip design through ARM all the way up to applications in various sectors.
Speaking of ARM, they're putting a lot of faith in that company, even rejecting a huge buyout offer from NVIDIA. What's the thinking behind that? Why hold on to it when they could have cashed out for a fortune?
Well, they believe ARM's future in AI chip design is potentially even more valuable. Remember, ARM licenses its CPU designs, collecting royalties on practically every chip sold. As AI becomes more ubiquitous, that's a pretty powerful position to be in.
That's a really interesting point. It seems like SoftBank is betting big on ARM being the backbone of the future AI infrastructure.
Right, and if you look at ARM's growth since 2015, both in terms of revenue and personnel, it's clear that they're experiencing a surge, likely fueled by this increasing demand for AI-capable chips.
Okay, let's shift gears a bit and talk about the financials.
Okay.
The report highlights a record net asset value, NAV, of 27.8 trillion.
Yeah.
That's almost double what it was the previous year.
Yeah.
What's driving that growth?
The ARM IPO was a major factor. There was initial skepticism about its valuation, but it clearly outperformed expectations, contributing significantly to that NAV increase.
So they're riding high on the success of ARM. But what about their other ventures? Are they seeing positive returns across the board?
That's where things get a little more complex. Okay. To understand SoftBank's financial performance, we need to delve into their different business segments and look beyond just the top line NAV number.
Right, because SoftBank isn't your typical company with a single product line. They've got their fingers in a lot of different pies. Where should we start?
Let's break down their business into three key segments: the investment business of holding companies,
Okay.
SoftBank Vision Funds, and the SoftBank segment, which includes their more traditional operations like telecommunications.
Okay, so first up, the investment business of holding companies. What exactly falls under that umbrella?
This segment is home to some of their biggest and most established investments.
Okay.
Companies like Alibaba, T-Mobile, and Deutsche Telekom.
Oh, well. Okay.
These are holdings they manage directly, separate from their Vision Fund activities.
So these are the blue chip stocks, the giants of the tech and telecom world. How are those investments performing?
The performance of these holdings can fluctuate with market conditions, but it's important to remember that SoftBank views these as long-term strategic investments, not quick flips for profit.
Yeah.
They're looking for sustained growth and value creation over time.
And these holdings are classified as financial assets at fair value
Mm-hmm.
through profit or loss,
Yeah.
FDTPL, right?
Yes, that's correct.
Okay.
What this essentially means is that their value on SoftBank's books is constantly being adjusted to reflect their current market value. So if a company like Alibaba sees its stock price rise, that gain is reflected on SoftBank's balance sheet.
Ah, so their financials can be a bit of a roller coaster depending on the daily whims of the stock market.
Precisely. And that's why it's important to look beyond any single year's results and focus on the long-term trends.
Okay, so we've got these big publicly traded companies in one bucket. What about the SoftBank Vision funds? Those are famous for their investments in startups and emerging technologies, right?
That's right. The vision funds operate like venture capital funds, focusing on high growth, disruptive companies, mainly in the tech sector. They're not buying shares on the open market, but investing directly in private companies with potentially huge upside.
So instead of betting on proven winners, they're trying to identify the next big thing before everyone else catches on.
Exactly. They're looking for companies that align with their vision of the information revolution and have the potential to become major players in the AI-driven future they envision.
And they're not just writing checks. They're actively involved in guiding and supporting these startups.
That's a key distinction. They provide not just funding, but also strategic guidance, connections to their network of portfolio companies, and operational support. They're actively trying to nurture these companies and help them achieve their full potential.
Okay,
It's like they're building a whole ecosystem of innovation.
that's the key takeaway. They believe that by creating this interconnected network of companies, they can accelerate the development of groundbreaking technologies and bring about this information revolution they're always talking about.
Right.
Okay, so we've got the investment business of holding companies, focusing on publicly traded giants, and the SoftBank Vision funds nurturing the up-and-coming startups.
Yeah.
What about that third segment, the SoftBank segment? I know that's where their Japanese telecom business lives.
You're right. The SoftBank segment is more of a traditional operating business. It encompasses SoftBank Corp., their Japanese telecommunications subsidiary, as well as other businesses like LY Corporation, which houses their internet and e-commerce ventures, and PayPay, their digital payments platform.
So it's a mix of established businesses and newer ventures, all operating under the SoftBank brand.
Exactly. And this segment is interesting because it provides a source of stable, recurring revenue that helps balance out the volatility of their investment activities.
It's like they've got this steady stream of cash flow coming in from their telecom and internet operations, which they can then use to fund their more ambitious investments in the future of AI.
That's a great way to put it. It's like they're using the profits from their present-day businesses to fuel their bets on the world of tomorrow.
So they've got a pretty diverse set of businesses, each with its own set of risks and rewards.
Yeah.
But when you add it all up, how are they performing financially? What do the numbers tell us?
That's where we'll dive into next. Let's take a closer look at their financial highlights and break down their performance in 2024,
Okay,
starting with their income statement.
great. Let's do that. It will be interesting to see how those different business segments contribute to the overall financial picture.
Their financial performance in 2024, well, it painted kind of an interesting picture. They reported a record net asset value, NAV,
Yeah.
of 27.8 trillion, largely fueled by the successful ARM IPO.
Right?
But they also recorded a net loss for the year.
Okay.
So it's a bit of a mixed bag.
A record NAV and a net loss. Those seem like kind of contradictory signals.
Yeah.
How do we make sense of that?
It's all about understanding the nature of their business and how their investments are reflected on the income statement. Their net income can fluctuate significantly from year to year, depending on the performance of their investments and whether they choose to hold or sell.
So a net loss in a single year isn't necessarily a cause for alarm.
Not at all, especially for a company like SoftBank. Remember, they're playing the long game. Their net loss in 2024 was largely attributed to unrealized losses on their investments. This means the value of some holdings decreased on paper, but they didn't sell those investments at a loss.
Ah, so it's like watching your stock portfolio dip during a market downturn. You haven't actually lost money unless you sell at the lower price.
Precisely. And SoftBank has made it clear they're not fazed by short-term fluctuations.
Mm-hmm.
They're focused on the long-term value creation potential of their investments.
Okay, so net income might not be the most telling metric in this case. But let's talk about revenue. How did their different business segments contribute to their top line in 2024?
Well, their revenue model, as we've discussed, is quite unique. As a strategic investment holding company, their primary source of income is gains from investments. This could be dividends from their subsidiaries and associates, as well as profits from selling off portions of their investments.
Well, right, because they're not generating revenue from selling products or services like a typical company.
Mhm.
Their revenue is essentially the result of their investments doing well.
Exactly. And this is why their income statement can look very different from year to year. It all depends on the performance of their portfolio companies and their strategic decisions to buy or sell.
So a large chunk of that revenue likely came from the ARM IPO.
You got it.
Okay.
That was a major contributor to their top line in 2024. But it's crucial to remember that investment gains can be unpredictable. Their financial performance is inherently tied to the often volatile nature of the markets they invest in.
Okay, so their income statement tells part of the story, but we need to look at the bigger picture.
Right.
What about their balance sheet? What does that reveal about their financial health?
The balance sheet provides a snapshot of what they own, their assets, and what they owe, their liabilities, at a specific point in time.
And we know one of their most significant assets is their investment portfolio, right?
Absolutely. Their investments in companies like ARM, Alibaba, T-Mobile, and those held through their vision funds form the backbone of their asset base. This is where a considerable portion of their value resides.
But we also need to consider their liabilities, right? How much debt are they carrying?
That's a key point. Their annual report does show a significant amount of debt, primarily related to their various investment activities and financing operations.
So lots of assets, but also lots of debt. How do we assess whether that level of debt is healthy or concerning?
That's where analyzing their debt structure and looking at key ratios becomes crucial.
Okay.
One important metric is their loan-to-value LTV ratio, which compares their debt to the value of their assets.
So a healthy LTV indicates that they're not overly leveraged and have sufficient assets to cover their debt obligations.
Exactly. SoftBank strives to maintain a healthy LTV, which provides reassurance to investors that they're managing their debt responsibly. But it's something to keep an eye on, especially in a potentially volatile market environment.
Okay, so we've looked at their income statement and balance sheet.
Yes.
What about their cash flow statement?
Right.
Why is that particularly important for a company like SoftBank?
The cash flow statement is crucial for understanding their financial flexibility and ability to manage their investments and operations. It shows how much cash they generated from their operations, their investments, and their financing activities.
This gives us a clearer picture of the actual cash flowing in and out of the company, not just accounting profits or losses.
Precisely. And for a company heavily reliant on investment activities like SoftBank, strong cash flow from investments is vital.
Right. They need cash to fund new investments, support their portfolio companies, and manage their debt.
Exactly. And while their investment gains can fluctuate, it's encouraging to see their cash flow from investments remaining positive. This demonstrates their ability to monetize their investments when needed.
That brings us to free cash flow, a key metric for investors. What does their free cash flow situation look like?
Free cash flow is the cash left over after covering operating expenses and capital expenditures. It's a measure of financial flexibility.
Okay.
How much cash they have available to invest in new opportunities, pay dividends, buy back shares, or pay down debt.
So in SoftBank's case, a healthy free cash flow means they have the firepower to continue pursuing their ambitious investment strategy while also rewarding their shareholders and maintaining financial stability.
Exactly. And it's something to watch closely as they navigate a market that's becoming increasingly volatile and uncertain.
All of this financial analysis is insightful, but let's get to what most investors really care about: shareholder value. What are SoftBank's plans to reward their investors?
Their report emphasizes their commitment to shareholder value creation through dividends and share buybacks. They believe these initiatives, combined with their long-term growth strategy, offer a compelling proposition for investors.
Okay, let's break down those plans.
Okay.
Starting with dividends, what can investors expect?
SoftBank has a history of paying dividends, and their 2024 annual report confirms their commitment to this practice.
But they haven't announced any specific dividend amounts or yields for the coming year, have they?
That's correct. Their dividend policy is determined by several factors, including their financial performance, investment plans, and overall market conditions.
So investors will have to wait and see what the actual payouts will be.
Right. But their track record of paying dividends and their continued commitment to shareholder value creation should provide some reassurance.
Okay, what about share buybacks?
Right.
How does SoftBank approach this, and what are their plans going forward?
Share buybacks are another way for companies to return value to shareholders. Essentially, they use their own cash to buy back shares of their own stock from the open market.
And what's the advantage of doing that?
When a company buys back its own shares, It reduces the number of outstanding shares, which can increase earnings per share and potentially boost the stock price.
Right, it's like making the pie smaller so that each slice becomes bigger.
Exactly. And SoftBank has been actively repurchasing its own shares in recent years, indicating their commitment to this method of returning value to shareholders.
Do we know how much they've spent on buybacks recently, or if they have any specific targets for the future?
While their report doesn't outline any concrete numbers for future buyback programs, they do mention their intention to continue share repurchases as a core component of their shareholder value creation strategy. It appears they see this as a flexible tool to utilize as needed based on market conditions and their overall financial position.
So it's another lever they can pull to potentially enhance returns for their investors.
It sounds like they're trying to strike a balance between reinvesting in their future growth and delivering more immediate value to their shareholders.
Yes, that's a good observation. They're in a phase where they need to carefully manage their resources to fuel their long-term vision while also keeping their investors happy.
Yeah.
It's a delicate balancing act.
So as we wrap up our deep dive into SoftBank's 2024 annual report, let's assess the business moving forward. What are the key factors that will determine their success in the years to come?
That's the million-dollar question. There are several key factors that are worth watching closely. First and foremost, the success of their AI-focused investment strategy will be paramount.
Right, that's the cornerstone of their entire 300-year plan. But AI is a rapidly evolving field, and there are no guarantees.
Right.
How can we evaluate the potential risks and rewards of this central bet they've made?
Well, we need to consider whether the technologies they're investing in will truly deliver on their promise.
Right. Will AI revolutionize industries as they predict, or will it fall short of expectations? Not every AI company they back will be a winner. Some will inevitably fail, so their ability to pick the right horses and effectively manage their portfolio will be crucial.
It seems like their ecosystem approach could give them an edge here. By fostering collaboration and sharing expertise between their portfolio companies, they might be able to accelerate the development and adoption of these transformative technologies.
That's their hope, and it's a strategy worth observing closely.
Right.
But beyond the technological advancements, there are also market factors to consider. Will there be sufficient demand for these AI-powered products and services?
Right.
Will customers be willing to pay for them?
Okay, so we've got the technological hurdles and the market adoption challenges to consider. But what about the financial side?
Yeah.
They're operating with a significant amount of debt. How will that impact their ability to execute this ambitious strategy?
Their debt management will undoubtedly be a key factor in their success. As we've discussed, they're carrying a hefty debt load, and rising interest rates could put pressure on their financials.
So they need to walk a tightrope between pursuing their ambitious growth plans and maintaining a healthy financial foundation. They'll need to generate enough cash flow from their investments and operating businesses to service that debt and avoid getting into trouble.
You're absolutely right. It's a delicate balancing act, and their ability to strike that balance will be crucial in the coming years.
So we've got the AI advancements, market adoption, and debt management on our radar. What else should we be watching closely?
The regulatory landscape for AI is evolving rapidly, and it will be fascinating to see how SoftBank navigates this complex terrain.
Okay.
Governments around the world are starting to grapple with the ethical and societal implications of AI.
So they'll need to ensure that their AI investments are aligned with evolving regulations and address potential concerns about data privacy, algorithmic bias, and the broader impact of AI on society.
Yes, it's not just about maximizing profits. It's about ensuring that these technologies are developed and deployed responsibly.
Right.
They'll need to demonstrate a commitment to ethical considerations as AI becomes more deeply integrated into our lives.
Okay, so we've got a lot to keep in mind as we track SoftBank's journey. The success of their AI investments, their ability to manage their debt, navigate the evolving regulatory landscape, and demonstrate a commitment to responsible innovation will all play a role in determining their fate.
Absolutely. It's a complex and fascinating story, and we'll continue to watch it unfold with great interest.
Well, we've covered a lot of ground today. We've explored SoftBank's unique business model, their strategic investments, their financial performance, and the challenges and opportunities that lie ahead. But before we wrap up, there's one more crucial aspect of their business that deserves attention: their approach to corporate governance.
That's a great point. Governance is often overlooked, but it's absolutely essential for a company of SoftBank's size and complexity, especially with such a diverse and globally dispersed portfolio of investments.
Right, because effective governance is all about how they structure their decision-making processes, manage risks, ensure accountability, and maintain ethical standards across their vast network of operations.
And with their stated goal of building a 300-year company, strong corporate governance will be paramount to their long-term sustainability and success.
So let's dive into the details of their governance structure and see how they approach this critical aspect of their business.
SoftBank seems to recognize that good governance is fundamental, especially given the scale and scope of their operations. They've highlighted their board of directors, which is responsible for guiding the company's overall strategy.
Okay, so the board is at the top, steering the ship.
Right.
What's interesting about SoftBank's board, though, what makes their approach to governance stand out?
They've put a lot of effort into building a diverse and independent board. It's not just an echo chamber of insiders.
Okay.
They've got a good mix of internal executives and external directors with expertise in various fields.
So they're bringing in different perspectives and challenging the status quo. That makes sense if they want to avoid groupthink and ensure they're making sound decisions.
Yeah.
But how do they ensure the board remains objective?
That's where independent directors play a crucial role. SoftBank has appointed several independent directors who have no affiliation with SoftBank or its portfolio companies.
Right?
This independence helps provide objective oversight and ensures the board can challenge management when necessary.
That's a really important point. It's about having those checks and balances to prevent any one person or group from having too much power. But a board can't oversee every detail of a massive company like SoftBank. How do they manage the day-to-day operations and ensure everything is running smoothly?
They've established several committees to oversee specific areas of the business,
Right.
like the Audit Committee, the Compensation Committee, and the Nominating Committee. These committees provide focused attention on critical aspects of corporate governance, ensuring compliance and responsible decision-making.
So they're dividing and conquering,
Yeah.
giving these committees the power to delve into the details and hold everyone accountable. But with a portfolio as sprawling and diverse as SoftBank's risk management, must be a huge undertaking.
Yeah.
How do they approach that?
They've implemented robust risk management processes, with a dedicated team responsible for identifying and mitigating potential threats across their entire investment portfolio.
So they're not just hoping for the best, they're actively identifying and addressing potential risks before they blow up. What are some examples of the risks they're focusing on?
Given their global reach and the nature of their investments, they face a variety of challenges. These could include regulatory changes in key markets like China, the constantly evolving landscape of AI,
Right.
cybersecurity threats, geopolitical instability, and the ever-present risks of economic downturns. They're operating in a complex world with a lot of moving parts.
It sounds like their risk management team has their work cut out for them. But beyond just managing risk, they also need to uphold ethical standards across their operation.
Yeah.
What are they doing to ensure responsible and ethical business practices?
SoftBank has been quite vocal about their commitment to ethical business practices and compliance with all applicable laws and regulations. They've embedded ethical considerations into their investment process and operational guidelines.
That's essential for a company operating on a global scale like SoftBank. Their reputation is everything. They need to be seen as a trustworthy and ethical partner to attract investors, business partners, and top talent.
Right, and they've acknowledged the importance of responsible innovation, particularly when it comes to AI. They understand that these powerful technologies need to be developed and deployed in a way that benefits society and upholds ethical values.
So it seems like they're putting a lot of effort into getting governance right. They got a diverse and independent board, specialized committees, robust risk management processes, and a clear commitment to ethical business practices.
Yeah.
It appears they understand that strong governance is essential for building a sustainable and successful company, especially one with such ambitious goals as SoftBank. Well, we've reached the end of our deep dive into SoftBank's 2024 annual report. We've covered a lot of ground today, from their ambitious 300-year vision to their intricate business segments, their unique financial model, their shareholder value creation plans, and their commitment to strong corporate governance.
It's been a fascinating journey through the world of SoftBank. They're a company pushing boundaries, embracing risk, and betting big on the transformative power of AI.
They're a company that certainly sparks a lot of questions and leaves us with plenty to ponder.
As we've seen, they're not just about generating profits. They're aiming to shape the future of technology and build a company that will stand the test of time. Only time will tell if they achieve their audacious goals, but they're undoubtedly a force to be reckoned with in the global business landscape.
To our listeners, we encourage you to delve into SoftBank's annual report, conduct your own research, and draw your own conclusions about this fascinating and often enigmatic company. Until next time, happy diving.